Right, our topic this morning is effective business partnering through analytics. Leading the discussion is our moderator, Joseph Alfred. Now, Joseph is the head of policy at ACCA. He is responsible for the implementation and market customization of ACCA's policy through professional insights to drive ACCA's public value mission and brand objectives in Singapore as well as ASEAN. Joining him on the panel, Manik Bandari. I'm sure you're familiar with him. He was our presenter earlier. And with the panel is James Chew. He's the head of finance for eBay, Southeast Asia, Japan, Israel, based in APAC HQ, Singapore. He is responsible for all aspects of finance, including business data analytics. Prior to joining eBay, James held a variety of finance and commercial leadership positions of increasing responsibilities at GE Capital Singapore, Temasek Holdings portfolio company across 10 plus countries in US, Europe, Asia, and Australia. We also have another CFO, Kwan Lili, who is the CFO for ABB Singapore, a subsidiary for the Fortune 500 Swedish engineering technology company. At ABB, Lily is responsible for the smooth execution of the finance, treasury, internal control, and real estate functions. She's also an independent director of Capital Land Retail China Trust. Okay, Lily is a dynamic, multi-skilled professional with over 25 years experience in financial services spanning investment banking, private banking, and retail banking. And she was previously the country manager and chief operating officer of Barclays Singapore. Interestingly, she has been admitted to the Supreme Court of New South Wales as both a barrister and a solicitor. Wow. A woman of many talents. Right, so with introductions complete, it's over to you, Joseph.
Thank you, Sophia. So the title of the panel discussion is Effective Business Partnering Through Analytics. It's actually the answer to a question. And what is the question? How do you get the maximum bang for your buck, when you're doing a business partnering activities? Okay, analytics basically, our solution is really analytics will basically enable you to do that, to get the maximum potential from your business partnering. In the morning, we heard just before the break, various perspectives on digital and analytics. I like Jonathan's observation that, that robots do not smoke. Okay, that's a very, very important observation. But of course, on a more serious note, he was talking about technology as an enabler. Then Manik also came over and he was talking about to keep the end in perspective when you're talking about, using technology, using digital. And then, of course, we had Jimmy, we had Saket also. And Vinika gave the opening address. So I think you must have got a variety of perspectives. In your booklet, you also have several articles that you can look at, and which gives you additional perspectives on this topic. So what actually do we mean by business partnering? There's no real, I don't think there's any, comprehensive definition of it, but I think in our context, what we mean is really the CFOs and the finance people working with business leaders and business units, okay, and also imparting their insights to improve financial performance, right? Of course, the panel can amplify on that if they think there's basically more to it. But the question is, if you are currently in your traditional role, right? If you're currently in a traditional role of accounting and control, maybe the question arises: why do we need to go into business partnering? Isn't it more work, right? And of course, if you're coming from a very control background, right? You may ask the question: so what about internal control? What about segregation of duties? Do we get too involved in the businesses, right? Will it have an impact on internal controls? So I mean, those questions may arise. So I need to give you a motivation, to go into business partnering. And there is an EY report a couple of years ago. It's actually volume 5 of the Master CFO collection. And it talks about the correlation between profitability and business partnering. So in the report, they actually have got some evidence that if you move away from a traditional role to become a business partner, profitability of the company actually goes up. So the first question maybe I'll just throw to the panel is, what is the correlation? How strong is the correlation between profitability and business partnering? Maybe James?
Sure. Thanks, Joseph, for the panel invite. I think regarding the business partner, what we talk about is it's all about sort of CFO. Traditional in the landscape, FP&A controllership, that's the domain expert. But what we're saying that the finance, I think what we're trying to play the role is that we need to speak the language of the business. So in a sense that we need to translate all those numbers into non-finance people can understood, and then in a sense that they can drive actions and then being the enabler to drive the profitability.
Great.
I think it's really essential that finance are seen to be business partners, and we are very real in many ways. So, for example, in ABB, as you know, it's an engineering company. We do a lot of big projects, but the margins are actually not that great most of the time. So you have to be really, really cognizant of who your clients are, your customers are. You have to check their credit status. You have to make sure the data is available on your collections on all your customers, and stop the orders, block it if they're not paying on time or above a certain number of days. So that's where data and how you analyze come in.
How does it affect profitability of the company?
So if you have a bad debt, so if your margin is 10%, but the customer don't pay, that's it.
But isn't that a traditional finance role? I mean, we're talking about, for example, which department do you have to work with in order to?
So we have a collections department, which is part of finance as well. Yeah. Sure. And then of course, there's also the more day-to-day thingy. If you're doing projects overseas, that's where tax come in. Make sure you don't create a permanent establishment. Make sure you have all the withholding tax, residency certs ready. So we do a lot of business partnering that way. It's a lot of day-to-day mundane type stuff.
Yeah. Which are the business units that you normally work with outside the finance department?
So in ABB, our business is actually divided into 4 main groups, 4 main divisions. So we work with all the 4. We have business unit controllers in each of the 4, and we also have project controllers in the businesses where they do a lot of projects as opposed to products. I
see. So Manik, all the case studies in the morning that you mentioned, right? All of them were collaborations within finance and a particular business unit.
Yeah, I mean that's true, and it's very different from what it was 2 years back. 2 years back it was generally the main business owner who would come to us for help. But now what we're seeing is a lot of the transformation projects are actually being driven by the CFO. So instead of just saying, here's the reporting and just reporting on things, they are digging a little bit deeper into, okay, if your cost of whatever logistics is going up, why is it going up? And a lot of times the CEOs are now giving these projects to actually the finance function to drive it. And some of the process excellence team and the performance improvement teams are now being parked under the finance function. Because I think the operational and the business units are very good at their day-to-day job and keeping the company running. But you need a slightly more, quantitative and finance focus and something which focuses on the bottom line to run these projects. So that's where I see the partnering happening more and more. And you should not look at the CFO as, trying to get into your area. It's more about having an additional discipline or expertise to make your project more successful financially.
Yes, exactly. So you really have to encourage the business unit to actually work with you. And
the best way to do that if the budget approval is from finance, so you will always get...
right. So currently the keys with you.
Yes.
Okay. So, what about the question on, if an auditor comes in and asks you, why are he's normally, thinking about internal controls in terms of governance. I was just talking to one of the participants, from a big company. Because of this, they have a separate governance unit which has oversight over this collaborations. Do you think that will be necessary? I mean, in terms of how do you address the situation where there is a breakdown in segregation of duties because the CFO becomes too familiar with the business unit?
I think within the finance function, you could have different people looking at different things. And I think if you do proper segregation of duties, it should not be an issue.
Yeah, so if I look at the way we set up internal controls in ABB, we have a separate internal control department, but they act as advisors. So to address your question on the potential conflict of duties between, you know, a finance function and a business, if you get too close to them, I don't think there is that risk if you set up your controls properly. So say, for example, you know, you have an order to cash control. You could put in place also a procurement to pay control where you draw up very standardized table of authorities. For every single control, you need 2 persons to sign off, and the 2 persons must not, you know, have any conflict. There must be proper segregation of duty. So you can't have, say, for example, in a warehouse, a person looking after goods receipt as well as the invoicing at the same time. You must make sure it's 2 separate people. Yeah.
Sure.
So it's how you implement your controls to avoid a conflict situation.
Yeah, just to add on, I think I went through the journey from B2B business to the B2C business right now in eBay. So I think the internal function, one of the scope that got expanded is that we work with very closely with analytics team. Because saying that, you know, from Southeast Asia side, we need to drive the GMV, the gross merchandise value. So we work a lot with the sellers, provide them the incentive, you know, marketing campaigns to boost the GMVs. But from control perspective, we want to make sure that all these payout, also the incentive scheme, are qualified for the payout. And then who's going to make the judgment call? Hey, should I pay, this seller XYZ amount versus the other sellers? And then that judgment call coming from the analytics part. Because we work with them from the very beginning, from the design phase. So at the beginning, before we launch the marketing campaign, what's the ROI? What's the incremental GMV, what we call IGMV? So we set a target at the front end. And at the back end, we're trying to close the loop when the actual happens. And then what's the proportion that to reflect the fraction of the original target. And then we want to make sure the analytics run sort of the unbiased algorithm to make sure that it's not cherry picking, saying that, hey, I'm the marketing guy, I have such a close relationship with seller A, so I should reward you versus penalize the other B. So we have to make sure that the algorithm behind the scenes are unbiased, so that all those qualified sellers are coming from the genuine payout scheme.
Yeah. So I think the lesson to be learned is really to have that extra governance oversight. You know, if you do enter into business partnering, right, and it's proven to be profitable, but you still have that. You still have to have a governance oversight on the activities itself. So there are already 57 people who have actually responded to the poll. So let's look at the poll results right now. Of course, the controller is there. Yeah. So it doesn't come out here. So I have to look behind. So the question is, what is the main challenge you face? What is the main challenge you face in business partnering? Can we get it from the other screen? Can? Okay, so I have to stand up. Okay, so very interestingly, okay, now I can. So I shall sit. Okay, what is the main challenge you face in business partnering? 59 people have responded to this question. The 4 options are lack of data and reliable insights to make decisions, convincing senior management about what finance says, getting buy-in from specific C-suite leaders, and understanding the business and the bigger picture. All right. So the main one, more than 50%, is the lack of data and reliable insights to make decisions. So I can tell you that you came to the right seminar, you came to the right event, because this is exactly what we are trying to address. Maybe Manik, you have any response to this?
I mean, it's a very valid question, and then different industries went through the same cycle. Many years back, I think this was 10, 12 years back, when we started to pitch analytics to telcos, a lot of the telcos had a predominantly prepaid base of customers. And in those days, to get a prepaid SIM card, you didn't have to register. So basically, they had no information about the customer, but they still wanted to use analytics to cross-sell, upsell, retain. And we said, okay, it's fine, but let's give it a shot. And what we found was they will always have call records, which means how many calls you're making, because that's how they bill the customers, right? So in those days, if you're making a call, they will deduct 14 cents from your prepaid balance. And just by using that data, we could actually do segmentation, because if you're calling India or if you're calling Bangladesh and how many times you're calling, which are you calling on weekend, weekday, just based on the transactional information, we could also build a demographic profile of the users. So, I mean, the lesson in that story is you will never have perfect data and you will not have all of it. But I think if you know the business question you're trying to answer, it's still worth a shot. And then you start with what you have. And through that, you will realize what are the data gaps. And then you can talk to your IT team, who will then figure out whether the data is sitting somewhere else and they will get it for you, or the business process needs to change a little bit so that you start capturing the data. So many years back, that's what happened. When you sign up for a loyalty card, or even now, you sign up for anything, they will ask you, what's your age, what do you like, your interests. You don't have to give it, but the whole data collection mechanism needs to be triggered off. And then you need to take off data privacy and how you protect the data. So long story short, I think you can always have more data, but that's no reason to not start trying to make sense of what you have and then start to make some decisions. It may not be 100% accurate, but it's still better than not having anything.
Yeah, so Lily, just to add on, there is a question from the audience here, which basically you're talking about data and the volume of data that we have. Is more information necessarily better? That's the question from the audience.
Okay, maybe I'll take that question. I think there is normally too much data. It's just, which ones do you think are relevant for the problem or issue that you are facing? And also, how do you analyze and make sense of your data? Mm-hmm. So, for example, if I look at, ABB in the finance department, there's huge of data, but do we do anything about it? Some things have been done over and over for the last 49 years in Singapore, but do you really use the data to improve the processes, to build more effective reports? It's a question of how you use the data.
So how do you, as a CFO, right? How do you select, or how do you get the data which is relevant to you flowing to you, rather than a barrage, a deluge of information?
Yeah. So you have to specify what you want on a report. Mm-hmm. Then you have to work with IT to get them to build the report for you. Or, you may actually use an available tool, buy an available tool, for example, Atlas, Abacus, Power BI. Yeah.
Mani, you want to say something?
No, we need to make a distinction between data and information. Mm-hmm. So I would say more information is always good. More data is not necessarily good. Right. And in fact, it's the analytics which translates data into information. I'll give you an example, like crane maintenance, which PSA or other ports do. It generates a lot of data because they have sensors. It throws out a lot of data. It's not necessarily information. What converts it into information is some physics model, which basically says if the voltage goes above this thing or goes down, then there's a fault with the electrical unit, and that's the information which is then pushed to the engineers. So just want to clarify,
Sure, yeah.
There's a lot of data, but to convert it into useful information, that's where the analytics comes in. And information is not bad. It's
right. So, James, I don't think you have a problem with data and analytics and so on and so forth. But there is a question on How do you actually progress your staff skill sets? Right? The question from the audience is, how should CFOs and finance leaders increase awareness and skill levels of their colleagues who are critical in progressing the finance function? So obviously, you work with a team, but you may be the only one who's the visionary in the team, right? How do you get the rest of the team to come with you?
Yeah, I was about to say that, I agree that a lot of data is coming into our platform because there's billions of transactions happen in every single second, right? So I think, back to the skill set. So when I joined eBay, I was a bit surprised that the analytics team, in terms of the org chart, it's report to the CFO. So in a sense that they are non-finance traditional background. So they are not coming from FP&A or controllership. They were sort of like a computer science or statistics background when I joined the team. So I think that kind of diversify a lot of the skill set within the team. And in terms of how we transform the sort of the data into information, right? So I completely agree with that one. So internally, we have a GMV diagnostic function. So if you think about, if I translate into the industry agnostic language, it basically we have to build up the funnel to analyze, my profit ups and downs. So that takes about sort of what we call the secret sauce of recipe to identify where's the softness coming from. So softness in the sense that GMV becomes declining, right? So we will, divide it into 3 main drivers. So one is traffic. So for people from this industry, you should understand that, the traffic or the either organic traffic or the paid search is a huge driver for those GMV ups and downs. And the second one is the search result. So it's like Google, though my product is good, but am I able to rank in the first page? That will trigger a lot of transaction happens. Versus if my product was in the third or second page, and then people won't be able to click through it. And then the last one is the trust and safety issue, right? So in the e-commerce industry, we're trying to avoid those fake products, all those defects. So these are sort of the already predefined channels or predefined framework to diagnose those softness. So I think that's the additional part there.
So I think what you're saying is that we have to have a structure, we have to have processes that actually filter the information so that by the time it reaches you, you get the relevant information.
Right.
So the next poll question has come up. So the question is, what is the main constraint you face in using analytics for business partnering? So we have gone from business partnering, now we're talking about analytics to power business partnering. What is the main constraint you face in using analytics for business partnering? Is it the lack of quality data? Is it the lack of investment by senior management? Is it the lack of understanding on how analytics can help? Is it the lack of skill sets? $34, $36? Who has all the problems? Okay, when it reaches 50, we will continue our conversation. 2 more to go. 49. 51. Okay, good. So basically, lack of skill set seems to be the main problem, 45%, but almost 30% also said lack of quality data. Less said lack of understanding on how analytics can help. 85% actually said, in other words, 85% do understand what analytics can do. Lack of investment of a senior management, only 10%. That means 90% of you actually believe that senior management have invested sufficiently. So the lack of skill sets to perform insightful analytics. How do you actually go about addressing this constraint? Do you recruit more data scientists, or do you train your people? How have you done it? Maybe you can explain. James and Lily. Yeah.
Okay. I can relate to that statistic. So the example from my company basically was when we roll out the text analytics tool, which helps us to basically avoid having to eyeball thousands of indirect text type transaction every month. And so we use this analytics tool that can tell us straight away how many countries we are exporting to, for example, 70 countries. In which of those countries are we not registered for VAT or GST? Are we paying the correct amount for, zero-rated, standard-rated type transactions? Yeah. The problem that we had was indirect tax compliance actually sits in the controlling and planning team. It doesn't sit with the tax team. However, when the report comes out, the colleagues in the controlling and planning team doesn't really know how to analyze the report or to sift out the red herrings from the real risks and to close the points and to improve the statistics. Yeah. So what we did there was we actually got our tax experts to come in to sit together with the controlling and planning staff and train them over months on how to read the reports. Yeah. And over time, the statistics actually became useful.
So how long did it take to transform the team, as it were?
I would say we are still on the way after 10 months.
Okay,
yeah.
Good. James, did you already have a team which is already going?
Yeah, I think, fortunately, this is a must-have function in the e-commerce space. So this is a dedicated analytics team, and then, as I said earlier, so it reports to the finance org. And then I think what we trying to sharpen the pencil from the non-analytic background folks is that we force them and then put into a lot of trainings, learn those Cfos or, R, Python, all these languages, because that will help a lot for them to deep dive into the sort of the whole data set.
I see. So there is a question from the audience relating to this, which is, do you recommend that for every organization to have a team of DA specialists to effectively harness data to support business decisions? In other words, in order to recruit DA people to come in and, instead of just relying on finance. Right. Is that a strategy that you will implement? Or would you, or is that a tool, is it putting you in a spot?
No, I think it's a fair question, right? So not only in e-commerce, but I think overall in the tech industries, right? So finance is always slashed with analytics. So these two functions always come hand in hand, and that's why when we recruit people, we were saying that at least a basic language skill set, in terms of the programming, it's a must for us, to work together.
Manik, do you think that finance people have to, just get an introductory knowledge of data analytics, or do they have to have a more advanced understanding?
I will share the EY story. So I will wear a different hat now because, so my role in EY is about providing analytics services to clients like you. So I will not speak about that. Now I will speak about how EY is doing it internally. Because EY, like you, basically we have internal auditors, we have accountants, and a big part of our business is audit, tax, and then also doing transactions, right? And all of those functions are being now a little bit disruptive, and they need to be able to do analytics themselves when they provide audit services to you. But then the model of just going out and hiring data scientists and helping them is not a very cost-effective model. Plus, the data scientists may also not find some of these things exciting. They would rather work on, some banking stuff and some other things. So it's very difficult to recruit people, and also quite expensive to recruit people, analytics specialists, focusing on these functions. So what we've done is, we have basically launched programs to upskill our existing people. So if you're an internal auditor, there's a separate program. And what we've done is we've had this program called EY Badges.
EY Badges.
Yes, so working with Coursera and other universities, now we've launched online training, and then we say if your role is an internal auditor, here are the minimum basic competencies you need to have for analytics. And these programs are now available online. They take these, they have to take some tests, and then they get a certain award. So as you move up, so if you're a senior associate, you have to be some competency. You move to a manager level, then you need to have a different competency. Because I think you can't just keep hiring from outside. The talent pool is very limited, and the salaries are going through the roof. And then analytics.
So is it more cost effective to do it internally? Is that what you're saying?
No, absolutely. And not just that, because see, analytics people will know analytics, but they will not know the domain.
I see.
So it's important for a domain person to actually pick up analytics, and you will get much more value out of it.
So Lily, when you're recruiting people, right, into your department, do you now insist that they, that they have to know about data analytics and so on? So, I mean, I'm talking about finance people coming into your team. Yeah.
No, we don't insist on it, but it's nice to have, because I think it's not easy. Analytics being, it's not really that new, but fairly new, and there are not very many people with domain knowledge as well as analytics capabilities.
Yeah, I see. So there is a concern about from the audience about the SMEs. The question is, considering cost and the talent, the cost of the talent and the cost of implementation, can SMEs afford to compete in the digital world? I mean, how can SMEs compete in the digital world, with that constraint in resources? Is there any, words of, comforting words, as it were? Or
no, I think on the flip side, basically they can just leapfrog some of the things, and they have a blank page to start from.
I see.
And I was, I work at EY, but then I also have a startup, which is, you can consider it as a SME, right? And then when I was thinking about hey, do I need to buy an ERP system, HR, finance, payroll? And then I discovered this very easy applications called Zero. And then you just pay like $20, $30 a month,
right,
and you can get going. So I'm saying there are solutions out there, but actually sometimes being an SME makes you more nimble and more agile. And so if something doesn't work, you can actually switch to.
Yeah.
And then all the universities here actually have great programs. So one way to get easy and cheap access to talent is basically go to the university, and they have interns. They can come. They have independent projects, so you can actually tap on that segment also. In fact, even at EY we do that, because it's a very cheap. I shouldn't say cheap, but like a very, very, effective way of getting
cost
access
effective,
to, yes.
Yeah.
And they get experience, and you get something out of it, right?
Yeah, I mean, you can even go into the cloud and get analytics support, right? Am I right? Yeah. So, James, you want to give any advice to SMEs?
Yeah, I agree. I think what we work with universities, not here in Singapore, because we are headquartered in San Jose in US. So we have a lot of cornerstone projects. So we outsource to the summer internships. So those sort of a third year or the fourth year undergrad, they come in our companies for the 2 months project, and then once we finish, they present the outcome to the leadership team, and then we think this is good to go. Then we hire them, or convert them from summer intern into the full times. So I think that's the way to build up the pipeline, and then have the talent.
Yes, yeah. So somebody was mentioning about human override in the earlier, in the earlier presentation. I think maybe it was Jimmy, and there is a question from the audience talking about the fact that good entrepreneurial leadership is still crucial to ensure sustainable growth of a company, and analytics alone is not, sufficient. So I think what he's talking about, the human, you still need the human interaction. Do you see that, or do you see analytics? Robots basically taking over the provision of insights to the board, as it were. Or how do you see, the human machine interaction? So, for example, James, right? I mean, you're eBay, right? You're in the environment where you're already working in a 2020 or 2020-25 environment, which other companies have not reached yet, possibly. So how do you partner with robots and who give you the information, the inputs, and so on and so forth?
Yeah, I think in the e-commerce space, it's still a lot of emotion purchase sort of on the spot. So if we use the pure analytics to drive our roadmap or the strategy roadmap, it might come up with a sort of a misleading behaviors. So that's why we were saying that Steve Jobs always saying that the customers don't know what they want. So in a sense that when we promote our products, some of them coming from historical data, historical trending, tell us, what's the hot items that we should sell in the next season. So that's from the data analytics part. Sort of they gave us the guidance, or not too much deviation. What we say that 1 or 2 plus deviation or minus deviation from the main trend. So that's the way we do the FP&A forecast. But if we purely follow the formulas, and we won't be able to capture all those emotional purchase that, in a sense that we generate the demand on the spot, and we provide a coupon to them, saying that, hey, if I want to purchase a Lenovo laptop, and then I put into the shopping cart for 30 days, and then from the data perspective, I was thinking, hey, what's the underlying reason for these people that has the hesitation to click the button, put a purchase? Maybe it's buying a laptop is not urgent, or our coupon is not attractive enough. So the machine will, based on the demographics of this particular person, if this is teenager, range about 20 to 30, and then this person play a lot of video games. So we thought this is a right target customer. Then on the spot we're trying to generate larger amount of coupon. On average, it's about 10 to 20%. And we were saying that, hey, this is the high potential. So the computer will generate 30 or 40% on a special, Black Friday or whatever, right? So that's the way we combine the structured data of the formulated strategy plus the emotion or the people's judgment onto that one, in order to convert this into actual sales. Right?
Yeah. So how much? Yeah. Maybe I'll ask Lily and Manik. So how much of human intervention do you still need even after the implementation? I mean, is it something that will continue over the years, or is it something that slowly the model will basically catch up with?
No, I mean there'll definitely be human intervention. I think the question boils down to the cost of making a wrong decision. And if the cost is too high, the implication is too high, there will always be a human involved. I'll give you an example. So basically machine learning for breast cancer research. So the AI model does pretty good in figuring out what are the new publications, what is the relevant research, and pushing that to the researchers. So, but even if it doesn't, maybe it pushes something wrong. I mean, there's no implication.
Yes.
All it's trying to do is, when you have thousands of journals to read, it was just pushing the top 10 which are most relevant, right? So the impact of making wrong decisions, so that part can be completely automated, and it's a machine which is doing it. But when it comes down to treatment, again, it will say, okay, maybe this drug or that drug is better based on the genetic makeup of that patient, but the decision will never be a machine's decision of what medication to prescribe. So those are areas where things can really go wrong. You will always need a human intervention or an expert to do that. Either it's for regulatory purpose, or just to make sure that the machine is not doing something wrong.
Right. Did you want to say something? Or?
Okay, let me share an insight from Professor Subra at the Leaders in Science forum last month. He actually said that in another 15 years' time, he thinks nurses will earn more than doctors.
Okay.
And the reason's because all the diagnoses which are now being done by doctors, all the prescription, can be more accurately done by machines, artificial intelligence. However, the soft part of the service that's provided by nurses, the care professionals, the high touch bit, that one will continue to stay with the human. So I would say again, with CFO and finance function, the soft part will stay, the soft skill part.
I see. So so one more question from, sorry? Sure.
So the whole question of talent, because obviously that's very important to us in the business world. And I'm actually going back to the previous question, but also based on what you just said. We have business school graduates, of course. what would you say to a young student or an MBA who say wanting a role in a finance function now in the future? Given everything we've spoken about, some aspects of this, even analytics, some parts of it will become much more easily taken over by machines. What is your ideal definition of digitally ready finance professional?
I think to be digitally ready, you need someone who is very resilient and very adaptable. Because, you know, you may start off as a finance professional, but I think you're going to find over the course of, you know, the next, I don't know, people are going to live till 100 because your body parts are going to be replaceable, etc. So potentially, you know, you could have like a 60-year or 40-year working life. And it's looking at the pace of disruption and, you know, the changes which are coming on us over the last 5 years. I don't think, you know, it's going to be a case where I'm qualified as a finance professional, I'm going to stay there forever for the next 60 or 80 years. So I would say to be totally sort of future-proofed in terms of skills, etc., you should tell yourself to be as open as possible, to be as adaptable as possible. And we need to train people. I don't know whether it's an inbuilt thing, but, you know, to the extent possible, train people to be resilient and adaptable.
If only humans could just download whatever stuff they want to into the brain directly, you know, each time they version 1, version 2, version 3. There's actually a mic there. If you want to physically ask questions, since you're feeling cold, right? If you're feeling cold, stand up and do a little bit of exercise. You can still ask questions physically. Does anybody want to just raise your hand? And the mic will come to you.
I mean, just on the previous question, I mean, I did my MBA 18 years back, and then we didn't have all this back then. But what's not changed is the fundamentals of business and what makes a company tick. And whether it's supply chain, finance, all those things are never going to change. It's just that you have now newer tools that you can use to your advantage. But I think one thing, and I have a 11-year daughter, and I've been telling her that is the one thing she should definitely learn is programming. Because no matter what you do in the future, there is no getting away from learning some programming, because even if you're a finance person, in 5 years you'll be expected to write your own code to do and all these automated things. I think the MOE has done a pretty great job. So even in schools, actually there's coding, there's programming, there's just literally no getting away from that. Everything else is good, but I think without some basic coding, programming skills, you are at risk in 5-10 years from now. Even our partners who are like audit partners, and even their own kids who have done accounting and finance, now they're sending them to do courses in programming, because it's going to be a part of every job actually.
I see. But will there be a time when you can just talk to a robot and the robot programs for you?
I mean, it's already happening.
Yeah, I mean, you know. So, yeah. So anyway, just to conclude, I mean, if nobody else has any questions, I mean, it's, you know, physical questions, we will end with a very burning question, which came from the audience, and I think all three of y'all can basically answer that. If we want to implement a digital strategy, how do we select which technology solution to adapt, since there is constant change, right? By the time you use one solution, another solution promises to be even better than the current solution. So how do we cope with this? I mean, how do we, do we stick with the old ones? What do we do? Maybe we just start from James and go off to, Lily and Mani. Maybe James. I mean, you have a constant responsibility to review new technologies, right? So how do you actually pace yourself, as it were?
Yeah, I think that's a great question, because that's the question that we pose to the team, consentaneously as well. Because I've attended multiple data sort of conferences, and then So during the coffee break or the conference break, there's a tons of booths, right? You know, a lot of companies providing very similar solutions. You know, either data analytics or a visualization tool. You know, Tableau. You know, Power BI. There's a tons of tools, and then I'm just asking the team, hey, what's the edge? And then if we purchase the license from these companies, and then how soon they're going to innovate or self-disrupt themselves to make sure that this
self-destruct.
Yeah, self-disrupt of their own products, right? To make sure that this license lasts, more than 5 years. I think that's the minimum expectation.
Yeah.
So,
do you make a study of how long this technology? I mean, before you implement or before you adopt, do you have an assessment of how long this technology will last?
Well, I think analytics, as Lily mentioned, it was not that sort of well developed since 10 years ago. Because I think this topic, even the university open analytics major or this subject in the most recent 2 or 3 years. So definitely it's a bit new topic, and then the way it works is that we have to just put a roadmap, sort of the trajectory in the next 5 years, and then we work backwards, right, in order to achieve that target, and what are those building blocks to achieve that same goal. So I don't have the concrete answer.
Yeah. It's a difficult question.
Yeah, it's a difficult question.
Really.
Yeah, I think it depends on, it's actually very case specific. What works for one company, a tool that works for one company may not work for the next. So you always have to do a cost benefit analysis, which I think CFOs or finance people are very good at. Look at all your SWOT analysis as well before you decide. And nowadays there's so much data out there. If you really want to, you can just Google top 10 tools for this, reviews for this sort of solution, and it'll all pop up. And you're free to choose, the top 3 or whatever, check out the pricing, etc. Yeah, so I would say the answer is really case specific. Yeah.
I see. And Manik, conclude.
And the process is no different than choosing your hand phone, right? So you have,
okay.
It's the same. They keep coming out with new models, better camera, bigger screen, this, that. You just have to figure out whether you're ready to pay that extra for that extra feature or not, and whether it makes sense to you. If it's somebody's giving it to you free, then why not, right? So.
Oh yeah, somebody's giving it to you free. So just to we are overrun 15 minutes. Apologies for that. So basically, I think you heard a variety, of perspectives earlier in terms of presentation, and now you hear those questions of yours being answered. I think some difficult questions also, and different perspectives. Maybe not all the questions have been answered. Apologize again. But thank you all for the very interesting questions. And also, I would like to thank the panel also. Can you join me in thanking the panel? Thank you very much. You can go. Thank you, Manik. Thank you, Manik. Thank you, James. Thanks. Difficult question.
I have plenty to take back with you, including a dedicated publication in front of you. Please take it back with you. I appreciate if you also fill out our feedback form and let us know how we can improve on future events. I know there's a lot of questions that haven't been answered. We will continue the engagement on our LinkedIn group, so please do join our ACCA Smart Finance LinkedIn group. We'll continue our discussion there. Other than that, please do fill out the feedback form. In terms of the presentation slides, you will be getting an email from us with a link to download the slides as well. So thank you very much for your participation this morning, and we hope to see you at future Smart Finance events. Thank you very much. Thank you.